India is now the third largest ecosystem in the world.
FOMO doesn't work.
There's a lot of, I would say, psychological plays that founders have been forced to bring in.
Ideas that they want to implement, problems that they see in and around for India, for Bharat.
It's a very, very interesting panel. For all the people sitting in the audience, you have a wonderful set of experts here. You have people representing early stage to late stage funds. You have experts in AI and machine learning. You have experts in bio and agri. So I think it's going to be a very interesting takeaway for all of you. It does not matter what you are building. I think that's going to be very, very exciting. So what we are going to do now, we'll start with a very quick round of introduction so that all of us can understand what these experts bring on the table, so that towards the end we might want to take some questions from the audience as well. I'll start with Vijay. Vijay, if you can take 60 seconds, talk about yourself and your fund. Thank you.
Hi everyone, good afternoon. I'm Vijay Singh Rathore, founder of Soonicorn Ventures. It's an early stage fund through which we make early stage investments into, it's a sector agnostic, so but our ticket sizes are 100K, goes up to $500,000. We have made 50 investments so far, and it's seed to Series A, typically what kind of companies we pick up.
Hey everyone, I'm Shubham. I'm actually a chartered accountant, but I've done everything that a chartered accountant typically does not do. So I've worked at unicorn startups, helped early stage startups start off, worked at incubators, run an investment banking firm in the past, and now I run Aeravti Ventures. It's a 100 crore sized venture capital fund. We are investing lead checks in pre-seed and seed stages of companies across B2B tech, largely looking at biotech, looking at agri-tech, and looking at deep tech. And hopefully here we can try to probably debunk some myths or talk about, what you should be expecting from the VC ecosystem.
Ashwin.
Hi everyone, good to be here. I'm the co-founder and partner at a fund called the Bharat Innovation Fund. We invest in deep tech startups that are globally competitive, typically in the pre-Series A to Series A stages. So check sizes up to 3 million, and then subsequently we follow on with the successful ones as well. Been investing in the Indian deep tech ecosystem since 2010, which is when I set up my first fund. And we are with this fund also looking at another area which is a little bit more inclusion focused. So a little bit of a parallel strategy that is here.
Hi everyone, I am Garima Seth. I am founder of Boon Capital Advisors, which is an early stage investment banking company helping founders raise early institutional investments. And as I speak this month, I also got acquired by a larger investment banking company, and I'm representing Merisis Advisors now. So we have been helping for last 4-5 years, been helping founders to raise early stage funds, and few interesting portfolios would include Gynoveda, Stage.in, Truly Madly, Blue Smart, GameZop, if these names seems familiar. So very excited to share my experience in terms of fundraising and how this ecosystem works, and I hope that should be valuable for you guys.
Dr. Sebastien Foucaud. I have more than 20 years of experience building up machine learning and AI-based software. I was the chief data and AI officer of various companies back at my time in Germany. For the last 5 years, I've been mostly consulting large private equity firms and venture capital companies globally on their investments towards different assets, in particular towards technology in AI. And I'm also a founder of a startup in agriculture as well, so I'm wearing several hats here. Looking forward to the conversation.
Hi everyone, my name is Ankit Machhar. I'm Director Ecosystem at Wadhwani Foundation. It's a US-based not-for-profit philanthropic initiative working with a mission to create family-sustaining job. One of the initiatives that we have is a startup program, Liftoff, where we run largest support program for startups in India. Over the last 3 years, we've worked with and enabled support to 4,000 plus startups. And this year, we are looking at supporting 10,000 plus startups, helping them to move from stage A to stage B through our interventions. Happy to be here and looking forward to the conversation.
Wonderful. I think thank you so much for all the panelists sharing your expertise. I'll just take a minute and quickly talk about myself. My name is Ravi Ranjhan. I have been very fortunate to be part of the startup ecosystem growth in India. Started early in 2010-11. I used to run one of the first incubator and angel network in the country called Indian Angel Network, which was in Delhi. Then I worked with a very interesting program which was led by NASSCOM called 10,000 Startups. This was one of the biggest programs to support startups in the world at that point of time. So had a very good opportunity to work with all the stakeholders across India. From there on, in 2017, 2018, I started my consulting. Again, got a chance to work with very interesting stakeholders. I have worked with various VC funds as an advisor consultant, where one of the largest fund where I was advising, it was $1 billion AUM, invested in over 450 startups. I have been an advisor to the royal family of Dubai for the last 3 years. I've been advisor to a large sports tech fund led by Shikhar Dhawan, AB de Villiers, etc., where it's a $75 million fund. We invest in sports tech. I also had a chance to design a very famous business reality show called Shark Tank India. So designed that show, got all the sharks, trained them, built the show, and now that show is kind of driving the entrepreneurship growth in the country. I spend a lot of my time in Dubai now, but obviously India is home, and very, very excited about how India is growing as an ecosystem. So I think I'll start with my first question, because all of us have been working in the ecosystem for a long time, and I have seen the time in 2011 when India had less than around 400 startups. From there, today India is now the third largest ecosystem in the world, doing really, really well. But when we look at the comparison with number one and number two, which is US and China, the distance is very, very far away. While we have a lot of startups, good amount of VC funds are coming up, investments are happening, but still one of the very large missing piece in India is access to risk capital. There's a video recently going viral by Jeff Bezos, where he's talking about why Silicon Valley is so unique. One of the biggest difference in other ecosystems across the world and Silicon Valley is that you have access to risk capital, where doesn't matter what you're building, if it's unique, if it's innovative, it might take many years for you to become profitable. Again, I'm not talking about making a company without a good solid business plan, but again, if you want to build something revolutionary, if you want to change the status quo, you have to spend a lot of time, effort, money. And while India is doing very, very good, surprisingly, or I would say sadly, we have not had true global innovations coming from India. This is something I personally am very sad about, and because the kind of talent we have in the country, the kind of access to technology we have in this country, we should have been able to build world-class global companies today. So my question, I think I would like to start first with Ashwin. Ashwin, what do you think is required at an early stage risk capital perspective so that we can have companies where they don't need to worry too much about revenue from day one or very early stage? They can rather focus on building a very solid foundation with a long-term plan of profitability, but build something which we can proudly sell to the world the way we are using applications today. I mean, almost 90% of the applications on our cell phone are not Indian applications. How can we change that? At least have a 30% space on that OS.
So Ravi, I mean, we've been watchers of the ecosystem for what, more than a decade, 15 years or so. And if I just look at the progress in the last...
Your mic closer.
Yeah, if I just look at the progress in the last 15 years, I'm a lot more positive than the narrative you put out. The rate of change is so high. And I think it's exponential, right? The curve is going like this. It's not a straight line, linear curve in terms of the growth of the ecosystem. And if I just think back to my days of conversations with entrepreneurs or founders in 2010 versus those that pitch to us today, I think there's a significant difference in maturity. Where I agree with you is we are still behind some of the other two ecosystems that you mentioned, but I think it's a function of time. And are we moving in the right direction? We are moving in the right direction. I think on three fronts. There is capital, a lot more available in India today, and especially at the early stages. Earlier it used to be a bunch of, very few of us as funds. I could literally count them on my hand. But now there are many more funds that are coming up, micro VCs. And you spoke about angel networks, and you drove one big angel network, which has become a fund as well. I think a lot of angel investment and family office investment is coming into the early stages as well. That's one. The second is the maturity of the startup founders, which is fantastic. And I'll just give you an example. I do believe we have globally competitive solutions. Maybe not so much in the consumer world, which gets a lot of the eyeballs and the buzz, but a lot in the enterprise world. One example, in 2014, I met this young entrepreneur, and we were looking at his startup. And this was in Noida, not far from here. And went to his house, and I mean, they were operating 3 guys out of this house office. First floor was the house, and ground floor was the office. And I talked to the guy. We didn't invest in the company, but then subsequently I said, listen, I need somebody to develop the website for my fund. And he actually came on board as my website developer and ran my website for a while. 3 years later, he started another startup. And then he came back to me and met me in Bangalore, where I'm from, and said, listen, I need to move to the US, so you got to find somebody else to run your website. The gentleman is a guy called Abhinav Asthana, and the name of the company he set up is a company called Postman. Postman is now valued at $4 billion, and this was coming from very humble roots in India, 10 years, 11-year journey at most, maybe 12. So do we have companies that are being used by, let's say, developers globally? Yes. Do we have as many equivalents in the consumer space? Perhaps not. And I think the answer to that is perhaps in your question, which is, do we have enough really high-risk capital where you would invest in a paper PPT or a PPT type startup rather than somebody who's actually shown revenues? I think there's less of that, but there's a curve to get there, or there's a pathway to get there, and I think we'll get there soon.
Wonderful. Thank you so much. Ankit, I would bring you up for your comments, because you work with a lot of early stage companies. In the last 6-7 years, what is the difference you have been observing, and how do you see the ecosystem changing to support a lot of companies at an early stage? Because I mean, we have so many VC funds who are happy to put in check right from pre-series A onwards, but before that, how do you see that? Do you want to comment on that?
So last 8 years and more importantly, the inflection point of 2014, drastic change with the government boost at the organization. Also, we've been able to kind of see a massive scale in the number of startups that have been coming out. Earlier, used to be founders that are experienced, they've gone out, come back, and then they wanted to start. Today, we see a lot of first-time founders coming in with a lot of passion, lot of innovation, ideas that they want to implement, problems that they see in and around for India, for Bharat. That's something that we are seeing lot and lot. Areas that they we see gaps are primarily on how do you present, how do you tell your compelling story, how do you pitch, understanding your right investor, whether it is government grant or an angel or a micro VC or a VC, those are the gaps that we are still seeing. That's something that we are trying to do, with a lot of other investors are also trying to do, but that's a long way that we have seen from founders who were experienced to now first-time founders coming in, taking up the chance. Lot of cultural change that we have seen, lot of acceptance in the family, lot of acceptance in the society that for the founders that go ahead and do that. Shark Tank, of course, has played a very critical role, but otherwise as well with the Startup India, a lot of initiatives. There is now a larger acceptance in the society for entrepreneurs, and that's a major change that I've seen in the ecosystem.
Perfect. Vijay, if you want to take up your input on early stage investment, you guys invest pretty early. Do you want to share maybe a few examples of when was the earliest you have invested in a startup? What convinced you to put money on the founder, the founding team, more than the business plan? Or was it the business plan which was so good that you invested at a very early stage?
Awesome. So, see Rajiv, I guess you go way beyond when you started with the Indian Angels, right? And early stage investing is typically betting on the founders itself. And I recall the first investment we made from Soonicorn Ventures very categorically, because that time we were only 70, 80 investors in the community, and today we are 3,000 investors community. But the founder we brought to pitch was a 23-year-old guy. solving a problem of selecting stocks, and basically it was a fintech platform called as Savart, Hyderabad based. Follow on, when we invested, then they were invested by VCats also, and then now currently they are sailing with few family offices. So, and when we were investing, it was typically a single man working, and that is the only company in which we have invested out of 50 investments, which is a single founder company. Apart from it, I guess most of the investors will always look for team, which is 2 or 3 people running multiple operations. But yeah, so it's only about the grit and the clarity that person had with the kind of what kind of business he wants to build around it. Right? This was one example. Second, we recently invested into Draksha. Not so early, because now they have also raised with Awana after we invested. They were also on Shark Tank. We believed on Arpit's vision, what he wanted to build with removing all the paralis from the farms, and then also removing the air pollution by using those paralis to create those thermocol replacements for the reducing packaging. Right? So all these early stage innovations can be done with agile companies, which are the early stage companies. Once the machinery is quite big, these kind of innovations goes away. So we pick up these companies when they are at their seed stage, pre-seed stage, but they're definitely revenue generating. Not so idea, that's a passing. We go to all the IIT, IIMs, find those companies which are building for the grassroots innovations, but definitely who are those founders who have executed it. It's not the अभी सिर्फ idea है, 4 friends मिलके बना रहे हैं, but after the college completes it will go off. It's very hard task, it's a tough task to find those good companies out of those thousands which are getting incubated at multiple incubations. But I think the real money being made there, because you can make 10, 20x very easily when you invest at this stage, rather than investing in a company which is 150 crore, 200 crores of valuations. Right? So I guess that's a thesis. We go very early on, but it's a risky one.
Perfect. Garima, I would like to bring you here. Congratulations on your recent acquisition. You have been in the ecosystem for a long time, supported a lot of companies at an early stage, raise, which is very difficult. Do you want to share your experience of the last decade on how you have seen the early stage risk capital and early stage investments playing around for founders in India?
Sure, thank you. So I'll take both the perspectives from investor side as well as from the founder side, because I've been playing a role of facilitator here for the longest time. So starting to talk about companies that we have been working with, and we have worked with more than 100 plus companies in last 5-6 years. Specifically, if we talk about deep tech companies, so these companies I have seen evolving a lot, and I would give you examples. When I started to work with deep tech startups, we would look at the product, and when we're talking about product, of course, the IPs within the product, the IPs that they're bringing in the process that they're doing or industry that they're disrupting. The founders earlier were doing a lot of free pilots for CVCs or free pilots for corporates, I would say. Now what I see, a major change that I've seen in the founders here is that a lot of founders, when they go to these companies, they are much more evolved and more confident in terms of the product that they're building. And most of them are not offering free pilots. They're saying, hey, we built something which is definitely, useful for you. We are, you are offering us a platform where this could be used, but it would be great if we don't go ahead and, take up free pilots rather than paid pilots or something. So founders have evolved and they have more confidence in terms of what they are building. And this is also a proof that, risk capital is improving in India. I have few stats in mind, like in 22, out of $27.8 billion of funding that was done, only $1.8 billion went into seed funding, which was hardly 5%. And if we compare it from the West, which you were talking, the video, I also saw that video, Jeff Bezos, the seed funding takes up at least 10 to 15%. So I think that shift is happening. And if we talk from the investor's perspective now, so a lot of money in the VCs is coming from the LPs. And if you look at the LPs, again, IVCA data for 2023, what we see is 80% of the LP money is coming from foreign institutions. Now, there has to be a shift. We need more domestic money. We need more angels. And that is also, I think government has done a great job in also removing the angel tax. And we see a lot of retail investors jumping into this asset class now. So I think as and when this ratio also improves, there could be an improvement in the risk capital.
Absolutely. Thank you so much, Garima. I have another question for Sebastien and Shubham. Shubham, I would like to start with you first. You invest in agri, bio, which are very, very interesting domain. But my question is that one of the largest agriculture economy is in India. While we have good development happening, but still, I mean, as an ecosystem enabler, as an investor, I would love to see more and more tech innovation happening in the agri space, in the bio space. If you look at the West, again, they have been doing it for a long time. India is also happening. We have companies like Decode. We have a few more companies doing good stuff. But do you want to touch upon what are the challenges where the number of agri startups is not as high as it should be? And as a fund, what is your philosophy to find good companies in this domain, and how do you support them post-investment, if you want to touch upon that?
Sure, definitely. No, very fair point, very honestly speaking. Agri contributes anywhere upwards of 30% to India's GDP. Less than $2 billion has flown into the agri-tech ecosystem in the last 10 years. 10 plus years, no unicorns. You can count the profitable companies in agri-tech on your fingertips, right? And that's a very large function of investors in India probably not being equipped enough to underwrite agri-tech companies. The word, when you involve agri-tech, people fail to understand how much tech is actually required, right? And then start drawing parallels to maybe an e-commerce vertical or probably to an enterprise tech vertical and say that, hey, why is the farmer not using your application, right? I mean, I've literally, over the years, have had experiences where the founders told me that, hey, I don't think an app is required, but my lead investor is telling me that will help you get the next round of funding, so I'm going to build the app, right? So it's a lot of, I would say, we've lost direction with respect to what is expected from companies in the agriculture space. It is, but the only thing that is required from an investor point of view is to understand that it's a long game, right? You cannot expect agriculture companies to, probably perform the same hyperscale growth that you expect from an enterprise tech company or perform the same valuation jumps that you expect from someone doing deep innovation, right? This is a sector wherein you need to sort of actually just sink your teeth in, sink the claws in, make sure that you are working for the people that matter in the agriculture ecosystem. Innovation may not necessarily come from building technology, but innovation can come from changing mindsets, changing processes, sort of maybe even tackling the market in a very different way, right? And that's what we focus on at the fund as well, is that we're not particularly looking for founders who are talking about like turning the life of the founders around in a matter of days, right? That's very rarely possible, number one. And number two, what we don't focus on is companies whose top line depends upon money coming from the farmers' pockets, right? It's a very sort of hard and fast policy at the fund from a thesis point of view, that if your revenue depends upon the farmer paying you, then we are not investing. All right, if a very small portion of it depends upon the farmer, sure, right? Then it's a conversation to have about the value add versus the amount of money that you're going to get from the farmers. But there are much larger players in the agri ecosystem who actually make the big bucks, who actually capture the higher set of the margin in the entire agri value chain, and no one is targeting them from an innovation point of view or from a targeting from a customer point of view, right? Everyone's going for the farmer angle because they think that it's easier to get maybe impact funds into play, maybe get some international funds into play, maybe even convince a venture capital fund that they're doing good for the society because I am apparently doing better for the founders, right? So there's a lot of, I would say, psychological plays that founders have been forced to bring in because of the investor mindset. But that's a shift now where we see more grants available on ground, more incubator support available, a lot more angel support available, where the founders are not getting lost with regards to what is the end objective of my company, especially in the agri-tech space. And I mean, that's what we are advocating for as well.
Wonderful. Sebastien, you did mention you have a agri-tech company, right? You are from Germany, you have been living across the world, and now you call India home for the last 3 years. Two questions for you. How do you see India as a startup ecosystem? And because you have expertise in agri, do you want to touch upon how big the opportunity in India and what can be done to improve it even further?
Sure. I mean, the state of agriculture, if you compare to the West, is very different here. Just look at the GPT per capita, because that's what really matter, right? Farmers in the West would be wealthier in general. They will be able to invest in technology, while mostly farmers in India won't be able to do that. But even so, in the West, apart from hardware development or drone, we see lots of startups working on drone here. If you look at pure technology player in the field of AI and ML, which is my field, every investment ended up to be related to risk management, right? Banking, loans, etc. in the US. Major agri-tech companies in the US are actually related to the sector of activity. So this is not directly aimed at the farmers, but it's basically using agricultural technology for a different aim to raise revenue. And I think there are ways to help farmers, not keeping it as India as an app or a solution developed for the farmers, but more for solving a bigger problems or connecting farmers to other source of revenue, for instance. So there's a huge exposure in India to agriculture, because a lot of people actually are related, have farmers in their family. Living around Delhi, you will see farmlands everywhere. So everyone see the needs of investing there, but I think we need to find different avenue to raise capital and to develop technology not only for the farmers but also for greater goods. So thinking about climate, thinking about other potential source of revenue, carbon credit, for instance, which is the field in which we're working. How to connect basically farmers to other means to get revenue instead of just focusing on developing food, and somehow having this support of farmers as a byproduct of another means of revenue for the startups. So I think funding is important. Data is also equally important, and I think the ability to democratize access to data in agriculture as well will be a game changer for this ecosystem. Soil informations, weather informations, climate informations. So there's a lot of work to be done on the data front as well, not only on the technology.
Wonderful. No, I think you touched upon a very interesting point of data, right? In India, there's a company I know they're doing pretty well with soil data for farmers, but there are very few companies. If you look at the entire nation, very little amount of data is available in terms of the quality of soil, moisture, etc., various parameters. See, you can build technology, but for that you need to understand what is this technology going to solve, because you're not aware about the problem. The problem in the West is very different from the problem in the South. The problem in the North is absolutely different, right? So I think that's very important. Thank you so much for that. We'll go to the next question and the topic of the day, where we are trying to talk about AI. Just a quick synopsis on what's happening in AI. Because there's a company called OpenAI who have built ChatGPT. Suddenly, for the last 2.5 years, there's everyone talking about AI. But founders who are working in this domain, you would know that AI has been in play for many years now. At enterprise level, at large, B2B level, AI, machine learning, algorithms have been there for a long time. Yes, Gen AI is quite new. And the applications are very exciting. It's very consumer focused. So there's a lot of conversation around it. Till 6 months ago, everyone used to think that OpenAI is invincible. They have built a model which nobody can even come close to. So no matter how much money anyone can throw in the market, nobody can even beat OpenAI or even think about it. But then suddenly came a company called DeepSeek, which changed the game overnight. Took out billions of dollars from the public market. Nvidia lost so much capital in just a few days. So was it hype? Was it a real fear? But I think what I believe personally is that what OpenAI has laid a foundation for the Gen AI. Now a lot of companies would be able to take advantage of that and build very interesting solutions from there on. So what OpenAI did is that they made generative AI very functional and practical. What DeepSeek did is that instead of spending $1 billion on training the model, you can do it in very less amount of capital. So now the question is that, do we need to build a foundational LLM model, or do we need to build solutions leveraging those LLM models and make it for everyday use? And I'm sure you must have been looking at the development of agents playing a very crucial role, large context data, which is again going to play a very crucial role, and everyone who understands AI, machine learning and the technology, they are talking about what's going to happen in the next 5 years. No one knows, because AI is not only going to make access to data available, but it's also going to make services very, very cheap. So there's going to be a complete shift into how the world will look like 5 years down the line, because AI is in infancy mode right now. When it will become a full-grown technology, I mean, we can only imagine what's going to happen. So let's start on some questions which are very crucial for India as a country. I'll start with Ashwin. Ashwin, during our conversation, you mentioned that you have been supporting DeepTech, B2B companies building solutions in AI, machine learning, and developing algorithms. How do you see India contributing in the race of AI, especially Gen AI now? And if you want to touch upon some of your portfolio companies where they have been building solutions for the past few years, and what is the difference you see in AI companies in India and AI companies coming from various parts of the world?
So Ravi, you're right. So we've been investing in AI since 2018. I think our first investment out of this fund was an AI investment. So we've invested across startups that are typically in what we call the application layer and classical AI, right? Not Gen AI, but classical AI. Something in emotion AI, which works with media and brands. Another one in industrial AI, which has a safety and productivity solution. We've got something in the digital lending space and AI used to underwrite debt provision to customers and consumers. A cybersecurity company which uses machine learning models, right? So these are some of the examples of different use cases and startups that we have supported, which are fundamentally built on AI or machine learning. Now, like I said, this is in our minds classical AI. I think the number of problem statements are so large that Gen AI or not, we would have continued to invest in AI for the foreseeable future, at least next 10 years, because we do believe that machine learning as well as AI, and as data becomes cleaner and more reliable, the number of solutions that will be used to solve real world problems will become more and more. And then Gen AI hit us, and OpenAI and some of the other things that you spoke about. And I just want to go back to something that I heard a Harvard prof say, a gentleman called Bharat recently at a conclave in Delhi. He said, listen, what Gen AI has done to AI is what Windows did to DOS, which you gave access now to somebody who doesn't know data sciences and AI, access to AI through an interface that can easily be consumed. So I really think that what Gen AI has done in the world is created buzz one, which is good for classical AI companies because more and more people will adopt. But I think it's a little bit more at this point of time consumer focused than enterprise focused in terms of adoption levels. And I say that because I've also been on the panel with some unicorn startup founders a couple of months back, where they had incorporated Gen AI features into their product and tried to take it to CIOs in very large enterprises in the US. And what happened is the CIO said, listen, if you've turned on your Gen AI functionality, apart from your regular platform and workflow platform, I want to remove it from my company. And the reason they said it is because there's not yet the confidence that has come in terms of things like bias, security, all of that. And I think that will take some time, but it'll get there. So the way I see it is a lot of consumers, mid-market is adopting Gen AI, but when you really talk about large enterprises, there is still a cycle and it will get there, but it's not yet there. And so what do we think is, from an Indian standpoint, investable? I think the large language models are for people who have very deep pockets. So you'll see a couple of investments in India, companies like Sarvam, Krutrim, of course, which is almost a spin-off from a larger company. But these are guys who have raised large capital from funds which operate with a very different fund corpus. I think the second bucket we talk about when we think of AI are, let's say, a middleware layer, which is anything to do with security, observability, and other aspects. Platforms that enable corporates to adopt Gen AI. These are the areas that will come in that middleware bucket, and I think there are a few interesting startups there as well. But really, if you ask me, honestly, we bet on people who are in the application layer solving real world problems, whether it be agri, which we were talking about, healthcare, where there's a lot of opportunity, fintech, another bunch of, loads of use cases that can be there. And I think over there, our observation is classical AI is still leading the charge, and we are still yet to see Gen AI come up with use cases which are extremely strong at our level of investment. So we have one investment in a Gen AI company which is used for, it's a Zoom info competitor which is used for leads, prospecting, a company called Cloudera. But I think we've been looking at other areas and still waiting for the maturity to come in before we make more investments. Your last part of the question is how can we compete with the world? And I think that's the layer where, two parts. In the LLM and infrastructure layer, I think there's an INDIC model, and even our government, METI, is talking about building a sovereign AI model because strategically it's important in case the rest of the world shuts off their LLMs to us. And we've seen some movements in those directions. So there's a lot of cognizance in the government of India that we need to build a sovereign AI LLM, and that could be something that happens. But even they'd work with private players as well. So Indic language models and AI, I think that's one play. But I really think the meat is going to be in the use case layer, which will touch global enterprises, Indian enterprises, but also the Indian consumer specifically to the problems that they are facing day to day.
Wonderful. I think that was very comprehensive. Thank you so much, Ashwin. Sebastien, I would like to bring you up. You have been working in machine learning, AI for a long, long time. We were having a conversation as early as 2016 and before that as well. Do you want to touch upon some of the case studies in your professional journey? And how do you think Indian founders can build solutions using Gen AI for the world from India?
Sure. AI is there for a long time. Machine learning exists. The first perceptron was built in the 1960s, right? And what we see is an acceleration of adoption of AI, like Ashwin mentioned, more classical machine learning, and this is a steady growth. So Gen AI is a sub-part of what AI can do, actually. And this coming from the easier access to actually computing services and computing system. So it's not been as easy as it is today to really leverage AI technology without being a deep expert. Hyperscalers in the cloud provide out-of-the-box solution in AI that can already ready to use by any engineer. So it's never have been that easy. But technology of machine learning-based technology rely on data, and this is where the moat usually of companies will be. As a key differentiator around AI is which data you have access to and how you use it. So to case studies, it's very broad. Essentially, as an evaluator, so I'm assessing different companies. I've done more than 100 of them in the past 3 years. We see every single sector of an industry using and leveraging AI to some sort of form. There's an acceleration in the past year with the Gen AI because, as Ashwin mentioned, Gen AI is somehow the way to interface with the machine, with natural language. That's what LLMs do. That's why agentic or agents are doing. They're using LLMs to interact with machines. So we see these adoptions, and it's a buzzword that is coming in every word and mouth. But technically speaking, today, any company can leverage AI. It's getting easier and easier, and it's an expectation for most of the private equity firms and VC companies that I'm talking with on daily basis. They always want to understand what is the state of AI within the asset and what is the vision around it, because this is definitely a disruptor. Cases range from healthcare, where we see now imaging, so computer vision has been improving dramatically in the past few years. The ability to really detect early stages cancer in lung cancer, for instance, have been improving dramatically. The ability for radiologists to make assessments of early stage cancer they couldn't detect before. Same with the ability to, it's a good application of Gen AI, by the way, dictation. So when you're a doctor and you are doing your assessment, you need then to spend hours and hours to write reports. This can be automated through AI and technology. Fintech, in particular, in forecasting, the ability to understand the risk and behavior of the different users. Again, leveraging machine learning quite heavily nowadays. So every sector of activity is touched by this new technology there. And it is going to accelerate because, as I said, this is getting easier for engineers to have access to AI. So.
Wonderful. Thank you so much, Sebastien. This brings me to the last question for the day. So for all the panelists, as a founder, I'm going to ask questions on behalf of founders. So imagine I'm trying to raise capital. As an expert who have been running funds and investing in startups, help me understand what is the do's and don't I should do while raising capital, number one. Number two, while there are so many investors available, it's very difficult to get hold of them. They don't respond to my emails. How can I use technology to make sure that at least I get a FaceTime with them so that I can explain what I'm trying to build and hopefully raise capital? Let's start with Vijay.
See, I guess to answer the second part of the question, how to reach out to the people, and this is the best place for people to network, right? The events. The first, maybe the FaceTime would be so effective rather than meeting people face to face, and that conversations can go forward. So I would say to founders, initial time is, and definitely don't rush for funding just for sake because you need the funding to get a self-accumulation that I raise the funding. Your first funding should come from your customers. That's what we praise. But the point is, if you're raising, if people are not responding to you, maybe you have to tweak it. You have to reach out to the right set of investors. There are so many funds these days, as we were speaking. There are so many angel investors now writing good amount of checks rather than how the funds would, they will just match how the fund is investing. So the access to capital is not that fierce how it was 5 years ago. You can find people across LinkedIn. That's a beautiful platform. You don't need AI just to reach out to people at this point of time. We are living in the world where still LinkedIn will hold you more value than any Gen AI can do at this point of time, right? So these things need to be done. Red flags for us, if someone is pitching us one product and after 15 minutes is pitching up to second thing, we want super sharp, focused founders who are building something with their team which has not been done so far. So these kind of companies we pick up, but yeah, I will leave rest of the questions.
Sure. So I think definitely, right, see, technology or AI or whatever it is going to be incorporated and at every company at some level, whether it's a meeting recorder or whether it's a AI sort of matching platform or whatever the case may be. But this is a universal problem where there are too many founders and too less investors from a pure number point of view, right? So that is a problem that's going to continue to exist, right? It's a very tough job to raise capital, and I would say that it should continue to be a tough job. So that everyone is sort of very aware of what the sort of hard reality is of taking someone else's money, right? If getting access to capital becomes easier, then we'll see a lot more companies tanking down after raising a lot more capital, right? So I would say access to capital should continue to be more difficult. Everyone should understand that it's someone else's capital that they are taking in order to return it in the future, right? There's a lot of sense of responsibility that gets attached to it. What founders should do instead is that, like Vijay said, there's a lot of funds out there now, there's a lot of investors across the globe looking at India, not only just from India, but also across the globe. What opportunity these startup founders have now is to be or reach out to more relevant investors, right? So using sort of maybe I would say maybe a chat GPT or maybe some other sort of search engine platforms to find out the investors who are more relevant for you, to maybe skim through some of the articles that they write, to maybe skim through some of the communication that they put out there in the media, to maybe instead of reaching out to 50 investors, reach out to those 10 investors who are absolutely relevant to you, right? And at the end of the day, why are the investors slow in responding? Because they know that if this is probably 30% relevant for me, is it a priority for me to respond today? Probably not, right? And if the mailbox is getting filled with maybe 80% companies who are 30% relevant, I mean, you're going to find a lot more people complaining about mails not getting responded to, right? So it is a function of that, right? As soon as I see a company which is absolutely relevant to me, I'm not waiting to go back to my laptop, put it on my CRM and then reply to them, right? I'm on my phone, I'm going to reply to them immediately, set up the call and then figure out the rest later, right? It is a I would say a matter of urgency, not just for the startups to raise money, it's a matter of urgency for the investor as well, right? If the number of investors are increasing, that also means that the competition for a good deal is also increasing, right? So if you are relevant to the investor, you will get a response quickly, right? Technology over there will not really matter at the end of the day.
Yes, so I agree with everything that was said, so I'll try and add more than anything else. I think the important thing is, as founders, be genuine. When you're talking to investors, you are who you are. Be yourself. Don't look at pitches on TV and then tailor yourselves, your pitches to that, right? I think it's very important to come across as who you are and for investors to feel comfortable with who you are as a person and understand you as a person. I think the second one is to persist, especially when there's an investor who might have been interested early and then has gone cold. It's never a hard no, because in those cases, investors will want you to come back with updates and see how you're progressing as well very often. I think in addition to what they said about finding the right funds, I think it's also about finding the right partner within a fund, because what we have seen is, let's say there's a fund with 5, 6, 7 partners sometimes. One person could be interested in one space and then the other person could be interested in another space. So do your homework and try and identify who are the people, individuals, as well as the funds who'd really be interested and excited in what you're building and want to learn more. I think the fourth one I would suggest is that, listen, there are some things that you can prove otherwise or validate otherwise. Let's say you have a terrific product, you can demo it and show that easily, or you'll have validation points. I think the ones that investors, what we look for is, and get interested in conversations is, and by the way, we do a lot of thesis work, right? We understand our spaces through a lot of secondary research. Our teams do a lot of work, as well as we speak with a lot of founders. So we understand many spaces reasonably well, but we'll never understand it as well as a founder who's operating in that space. And so every meeting that we find with a founder where we've learned something, 2 or 3 things that we didn't know ourselves, is where we give a few more, let's say, credits or bonus points to that particular founder. So understand the dynamics of your space extremely well through conversations that you may have with people in that ecosystem, so that when you come and speak to investors, you've understood those dynamics and are able to express that. And finally, tailor that conversation to show why you will be able to execute. Because one, and we are a deep tech fund which indexes heavily on product quality, right? And tech quality. But it's not just about tech and product, it's also about execution. And you must have heard most investors talk about execution. In that conversation, how are you going to be able to convince the investor that you're the right person to be able to execute and take that journey from 0 to 1, 1 to 10, and 10 to 100? That first conversation, if you're able to talk about the dynamics well and how you'll be able to execute, I think that will generate a lot of interest in terms of the next conversation.
So agree with everything that my co-panelists have spoken about. I'll go to a little more basics because I do work with a lot of early stage founders, and sometimes it's their first time journey of fundraising. So one, of course, cold emails and sending out emails to 500 investors doesn't work. You have to bring it down to very focused 50, 30 investors where you would have figured out, researched well, and of course tech plays a lot more important part here in terms of helping you leverage LinkedIn or any other platforms where you can figure out who are the right ones from the stage perspective, how much you are raising, which funds cuts what kind of check sizes, which are the focused or thematic funds. So if you are building certain kind of company, so please making sure that you are picking up the right thematic funds to reach out to. Research very well on the funds, look at their existing portfolios, and when you get a meeting with the investor, it's not, you have to utilize that time very well. So ensure that they also understand that you have researched well, you've looked at what other portfolios are there, how can you leverage, what are the synergies that could be built. So one is of course this. Second most important thing that I would like to mention here, which maybe the partners of the funds would not highlight, is that there is a process in a fund and there is a team in the fund. I have worked with so many founders, even very, very senior founders, and jumping on to this conversation that I only want to talk to the partners of the fund doesn't really help. There is a team which takes care of the process. There is a team which has, worked very hard in terms of understanding what you're trying to build. So I think this is something that I see as a don't rather than do, that you have to follow the process that our fund is looking at. And another big don't that I would suggest here is that FOMO doesn't work. I've worked with a lot of companies in helping them raise funds, So if you want to go and talk to the investors, tell them that, hey, I have 5 more investors who are keen to invest in me. I have only 10 days. Do you want to participate? The answer is 90% no. So the FOMO doesn't work. You really have to follow the process. You have to really, go ahead and learn what the investors are seeking and then pitch to them. So these are the quick few tips.
So from a technological perspective, what I've seen over the years is play on your strength. Especially if you're in deep tech, so you really want to sell what you're working on, but be aware of the weaknesses of your technology. You cannot solve everything. It will take time, but be aware of where the gaps are and have answers. And what we see typically is a bit later stage, of course, of companies, but there's always tech debt, so technological debt that is building up with time. And the good is to have a plan and being aware of where the limitations are. That really bring confidence in you as founders and tech founders into the investors when you have a strength, but you're also aware of where your weaknesses are, because that means that you're able to work on them, but you focus on the right thing at this moment. And this type of denying or not being aware of the weaknesses will not play good in conversations when you start talking with investors.
Okay, I think everything is covered. That's the beauty of being at the last. Maybe I'll just summarize. I'll take your job, Ravi. 3 things, but before that, let me just give you a quick fact. I think having worked with thousands of startups, early stage startups over the last 15 years, I'll draw some experience from the startups that I met every day. On an average, in an early stage startup's pitch deck, there are 20 slides. Every day, an investor, early stage investors would get around 20 decks. Now to read through the entire 20 slides, on an average, it takes 20 to 30 minutes. And to read through all those 20 decks, it goes to 5-6 hours a day. No investor has enough time every day spending 5-6 hours just reading decks. So that's where you don't get answers. That's where you don't get responses, because you have put in everything which they may not need. So just to conclude, I think first is very compelling story, your vision, passion, something that panelists have also covered. Have that well written, concise, clear in the email along with an executive summary. Now, who will you send this? I think Garima and others also pointed out. Do your investor due diligence very well. I'm an e-commerce platform. If I send it to Ashwin or Shubham, for sure you'll not get response because they're looking at deep tech startups. So do your due diligence. Who are you sending it? Otherwise, you'll never get response. And third, and the foremost, as Vijay said, do you really need funding at this stage? Do your diligence very well. See where can you get fund. Could be a debt, could be a government grant, could be various competitions, challenges. And this is primarily for an early stage startup. Instead of reaching out to a VC who you may not be the right candidate at this time. So that's just to summarize.
Thank you so much, Ankit. I think you very well summarized everything. I think just last point, I would like to cover 3 things. Number 1, not every business needs capital. Yes, you need capital to grow, but not every business needs capital to go to a certain point. But yes, there are few models where you need money right from an early stage. So you need to figure out if your company requires capital at a very, very early stage. If you don't require, honestly, don't raise professional money because it comes with a lot of responsibilities. It's not that you take money and you just, you have to make sure that you send a monthly MIS, you have to do calls and keep pushing on the numbers, and you get very aggressive targets. So unless you really need capital to go to the next level, don't rush to raise capital because it's available. That's number 1. Number 2, there are a lot of investors in the country now. You have to figure out that you are reaching out to the right stage of investor, which means that you are reaching out to, first you start with incubator, accelerator, grants, then you go to angel investors, then you go to your friends and family, then you do family offices, then you go to VC funds. Number 3, if you're building a solution in a deep tech company, it requires enough capital and it requires deep expertise. So you need to make sure that you're going to theme funds which have a theme on investing in that domain, be it medtech, be it agri-tech, be it health tech. You cannot actually raise capital from a generic investor at a very early stage and build that company in a very advanced stage. So what I'm trying to say is that if you're building something which is very technical, try and get experts both as a mentor and investor from an early stage so that you can get a lot of access. And again, to summarize, today India is now growing at a very, very fast pace in terms of access to capital, in terms of startups coming out. If you're building something from India, there are a lot of options and avenues available for you. Just go out, meet people at these kind of events, try and get a referral. I'm sure you'll be able to find your next client, you'll be able to find your next investor, and you'll be able to make it big from India. So I think that's all. Thank you so much to all the panelists for this wonderful conversation. Thank you for the event to host us at this wonderful conference. Thank you so much.
Thank you very much indeed. I would request our moderator, Mr. Ravi Ranjhan, to do the honors of presenting mementos to all our eminent panelists. To Vijay Singh Rathore, to Shubham Jhuria, to Ashwin Raguraman, to Ms. Garima Seth, to Dr. Sebastien Foucaud, and to Ankit Machhar. And may I invite Sakshi Chawla once again onto the stage to kindly do the honors of presenting a token of gratitude to our moderator, Mr. Ravi Ranjhan.